Welcome back to Harris Legacy Realty. I'm Quan Harris, your favorite commercial broker and property manager, here with Coldwell Banker Commercial. And in this video, I want to show you how to calculate the depreciation allowance for commercial real estate investments. Investors are allowed an allowance of recovery of invested capital, and it can be deducted from the taxable revenue. The allowance is called depreciation allowance, and it is used to recover the cost of the buildings and land improvements such as road or walkways. The tax basis of residential buildings that at least 80% of gross rents are generated from the residential tenants, such as multifamily property, has a recovery period of 27 and a half years. Non-residential buildings such as retail, office space, shopping centers have recovery period of 39 years. Land cannot be depreciated, only the building structures itself. The tax basis of a building is normally recovered in equal monthly increments except for the month of acquisition and disposition. Only half a month allowance is permitted during these months, no matter what day of the month the closing happened on. So let's look at an example. During March 17th, an investor acquires a multifamily property that operates until November the 19th when they sold that property. The purchase price plus the transaction cost equals $2.5 million. Because the property is residential, the $2.5 million initial tax basis of the building will be recovered over 27 and a half years. To solve the monthly allowance, just take the recoverable amount of $2.5 million divided by 12 and multiply that by the number of years of recovery, which is 27.5. The $2.5 million then divided by 330 will equal to $7,575.76 per month. During the year of acquisition, multiply the depreciation allowance by the number of months the property was owned in that year of purchase. Include the half month's allowance for March. Therefore, we take the months in use, which is 9.5, and we multiply it by $7,575.76, which equals $71,970 rounded to the nearest dollar. During each whole year, the investor's ownership allowance will be 12 times our monthly rate, which equals $90,909. During the year of disposal, the investor will claim an allowance for only 10.5 months because they sold in November 2009, which will equal to $79,545. If that property would have been a non-residential like office space or retail building, the allowance would have been even smaller. Because the recovery for non-residential properties is 39 years, we would calculate $2.5 million divided by 12 times 39. 12 times 39 equals 468. Then take 2.5 and divided by 468, which equals $5,342 rounded to the nearest dollar. If you like my video, please follow me on all my social media platforms and make sure you hit that like and subscribe button, especially if you want to hear more information on investing in multifamily properties in Atlanta, Georgia. I would love to help you achieve your real estate investment goal. Until the next video, stay safe and be blessed.